What if I told you the United States government is finally giving Bitcoin the green light it's been waiting for? After years of regulatory uncertainty, the first draft of Trump's new crypto framework, released on May 5th, provides the first real pathway for Bitcoin to reach its full potential without constant legal threats. And this isn't speculation, it's written directly in the framework that was just released. With clear definitions of digital commodities and mature blockchain systems, this regulation establishes crypto rules that the crypto market has desperately needed. But here's what they're not telling you about how these new rules could potentially 10, 20, or 50x your portfolio in the coming years. Have you noticed how every time you're about to make good money in crypto, some regulator steps in and ruins everything? Well, that's not an accident. You see, the truth is the current regulatory system for cryptocurrencies is intentionally complex and contradictory. And unfortunately, it's been designed to keep the average investors like you and me on the sidelines, while big institutions can quietly build and exit their positions. And to give you an example, let me show you exactly how this works. You see, since 2022, the SEC has launched wave after wave of enforcement actions against crypto companies, and these weren't coordinated efforts to protect you, they were just calculated moves that created massive market volatility. Remember when the SEC went after BlockFi in December of 2022? Well, they claimed the company didn't register its crypto lending product properly. At the time, they claimed the company didn't register its crypto lending product properly. What happened next? Well, Bitcoin prices tanked along with most of the market, and this pattern repeats itself over and over again. The SEC files some vague complaint, crypto prices crash, and somehow big players always seem to exit their positions right before the announcements. Ever wonder how that happens? Well, the real damage comes from the SEC's refusal to provide clear guidance. You see, historically, they've stated that they prefer to regulate through enforcement, essentially saying, we won't tell you the rules, but we'll punish you when you break them. And this approach has cost crypto investors billions in market value since 2020. Remember what happened with Ripple and XRP in December of 2020? The SEC filed a lawsuit claiming XRP was an unregistered security, and the price immediately collapsed. Thousands of retail investors lost money overnight, while insiders had already moved their funds. That's exactly what happens in a system that's designed to protect the powerful. And in March of 2023, the SEC issued a Wells notice to Coinbase, essentially a warning that enforcement action was coming. And not only did Coinbase stock drop, but the entire crypto market took a hit at the exact same time. The writing is on the wall. These aren't random events, they're systemic efforts to maintain control over emerging financial technologies. Now let's compare crypto regulations to other financial markets. When's the last time you heard about the SEC threatening to sue every major player in the stock market or calling all ETFs potentially illegal? It doesn't happen because those markets have very clear rules. You see, crypto, on the other hand, faces constantly changing interpretations and threats with no real rules or regulations. And this is textbook regulatory capture when government agencies end up serving the interests of the industries they're supposed to regulate. Big banks and financial institutions have spent millions of dollars lobbying to shape crypto rules that protect their interests at your expense. They don't want competition from decentralized finance systems that might make them obsolete. But what if there was finally a framework that actually gave clear rules instead of vague threats? Well, that's exactly what Trump's new regulatory framework attempts to provide. For the first time, we're seeing specific definitions of what constitutes a digital commodity, which is a crucial distinction that determines whether something falls under securities laws. And the framework defines a digital commodity as something whose value comes from the relationship of the commodity with the blockchain system to which the commodity relates. And it gets even more specific, saying that a digital commodity relates to a blockchain system. Its value is generated by the programmatic functioning of the blockchain system, has voting rights within the governance system, is issued through the blockchain's functioning, or is used to pay fees to validate transactions. Now, this might sound technical, but here's the real question. Which cryptocurrencies would qualify for this protection? Well, based on these definitions, Bitcoin would clearly qualify as a digital commodity exempt from securities laws because its value comes directly from the blockchain, it's used to pay fees, and it validates transactions through mining. And other established cryptocurrencies with similar characteristics would likely qualify as well. This means they could operate without the constant threat of securities violations that has haunted the industry for years. And what this means is that exchanges could now list these assets without fear of sudden SEC enforcement actions. Developers could build on these networks without worrying about unexpected legal consequences as well. You see, this framework creates a path forward that the crypto industry has been desperately seeking, which is a way to know which digital assets are safe from securities laws and which aren't. And this clarity alone could unlock billions in sidelined investment capital waiting to invest in crypto. But the real question is, will this actually free Bitcoin and other major cryptocurrencies from the SEC's constant threats? Well, let's look at what the framework actually says about enforcement. As they say, The devil is in the details. What if I told you the most important part of Trump's framework isn't even being discussed in the mainstream financial media? While everyone's focused on the headlines, there's a revolutionary concept buried in the fine print that could completely change how cryptocurrencies are regulated in America. And it's called the Mature Blockchain System designation, and it creates the first clear pathway for cryptocurrencies to escape SEC control. And this is a complete departure from our current system. You see, right now, nearly all cryptocurrencies live under constant threat of being labeled as securities. Just look at what happened with Ripple and dozens of others. The SEC has been picking off crypto projects one by one, creating a climate of fear where innovation has been stifled and stalled, and everyday investors can't access many promising projects as a result. But this framework changes everything by establishing specific criteria for what makes a blockchain mature. First, no single entity or group can control the system. This means that you have to have true decentralization, not the kind where a foundation or company pulls all the strings. And second, the value of the digital commodity must come from the system's programmatic functions, meaning it has real utility, not just speculative value. And third, the system must be open source, allowing anyone to participate without restrictions. And the framework goes even further in defining what makes a system functional. A qualifying blockchain must allow users to engage in its intended activities like transactions and consensus participation. Its code must be publicly available, and its operations must be determined by its programming, not by any central authority or central operator. And most importantly, no single entity can have special permissions to alter the system's functionality unless addressing vulnerabilities or through community consensus. So which cryptocurrencies would likely qualify right away? Well, Bitcoin is the obvious first candidate. It's fully decentralized, open source, and its value comes directly from its utility and scarcity. Ethereum would probably qualify as well, especially after its move to proof of stake. But many other popular cryptocurrencies might not immediately make the cut. Projects with foundations that hold large reserves or have special governance rights might need to make significant changes to their structure. And the framework also introduces completely new registration requirements for exchanges. You see, any entity wanting to operate as a digital commodity exchange, broker, or dealer must file a notice with the CFTC. And the good news is, this is much clearer than the current situation where exchanges operate in a sort of gray area, never sure if they'll be the SEC's next target. These new exchange rules essentially are focusing on transparency rather than control. You see, exchanges must publicly disclose the characteristics of each digital asset they list and explain their rationale for the listing decisions, and they also need to maintain open books, disclose risks to customers, and to segregate customer funds to prevent losses. And these are just common sense protections that don't stifle innovation like the current approach. You see, the truth is that these changes would benefit the average investors far more than institutions, because right now, if you want to invest in most crypto, you're currently taking on huge regulatory risk. The project you invest in could be labeled a security tomorrow, crashing its value. Exchanges could be forced to delist it. Developers could face legal action just for improving the code. The list goes on, but the bottom line is that this uncertainty keeps many potential investors on the sidelines. But soon, with clear rules, you could finally invest with confidence. You'd know which projects meet the mature blockchain criteria and which don't. And you could in turn assess actual project fundamentals instead of constantly worrying about regulatory surprises. The market could finally mature beyond constant fear-driven volatility. You see, here's the real question. Will Bitcoin and other major cryptocurrencies actually be exempt from SEC control? The framework creates a certification process where issuers can certify to the SEC that their blockchain system meets the mature criteria. The SEC then has 60 days to challenge the certification, and what this does is creates a clear path for established cryptocurrencies to gain regulatory certainty once and for all. So let's think about what this means for a second. For the first time, there's a mechanism for cryptocurrencies to definitively move beyond securities laws. No more vague threats, no more regulation by enforcement, just clear rules that everyone can understand and follow. Projects that qualify could operate without the constant legal cloud that has stunted growth for years. But here's what nobody's talking about: how these regulations might actually put more money in your pocket than you think possible. With regulatory clarity, institutional money that's been sitting on the sidelines could finally enter the market. Companies could build new products without fear of sudden legal consequences. And everyday investors like you could participate in a market where the rules are finally clear and fair. And if you're enjoying this content so far, please hit the like button for the algorithm and consider subscribing to the channel if you haven't done so already. But the choice is clear. We can either stay trapped in the current regulatory mess or push for the clarity this framework promises. For average investors, this means you can finally invest without constant fear of the SEC tanking your portfolio portfolio overnight, and the framework requires the CFTC and SEC to issue all necessary rules within 360 days of enactment. That's a huge shift from the current environment where investors are literally left waiting for years for guidance. And this timeline means we could see real change soon. The truth is, the battle for crypto freedom is just getting started. So when these regulations finally come into effect, make sure you're positioned to benefit.